Is this working? I don't know if I have anyone in the room. Can anyone hear me? Awesome. I apologize for the difficulties here. This is the first time I've ever done this, and I'm pretty terrible so far. So I'm very late on the first day. That sucks, but let's wait a few minutes, see if anyone else shows up. Looks like there's somebody in the comment section there, which is more than I expected. So one is better than none, so that's great. Hope everybody's doing okay today. I can't really see who's in the chat room, but whoever you are, welcome, and thanks for coming. And I don't have two screens set up. I leave out of the country tomorrow early in the morning. I have to head to the airport at 4 a.m. So I broke down my setup and I don't have a second screen. So I'm going to have to kind of split the screen as we get started here. And I'm going to monitor the chat from my phone. Hopefully we'll see how that works. So we'll have full screen charts on this screen, and then we'll have the chat comments will be on my phone. I don't really have a format for this yet. Obviously, this is the first time, so I don't know what the best way to do this is. But I guess beginning out, there may only be one or two people here. So in the chat box, you can just tell me which charts you want to look at, and we'll start with that. And I'll write them down on this side, and then we'll just go in order. And like I said, right now there's not that many people here. I didn't plan on a specific amount of time. I just want to see what the feedback is, and if it takes a little while, it's a little while. If it takes a little longer, that's fine too. So if there's anyone in the room now, you can go ahead and send me your which chart you want to look at. You can send me the symbol. Okay, the VIX. Okay, could take a look at the VIX. You know, I don't actually ever pull that up on TradingView, but I'm certain it's there. Yeah. All right, cool. So we'll do the VIX. Let me take this price chart off of order. All right. Okay, VIX. And then this is good because these are going to be stocks that I don't currently watch. So that'll be good. For MANA, is this the right one? MANA and then USDC crypto. Jacob. I'll wait for your response. So we'll go in order. I'm already 15 minutes late, so let's go ahead and get started. And we'll start with the VIX. Oh, I think we're already on the VIX, right? Okay. Excuse me. Hey, David, it's good to see you, man. I appreciate the support ongoing. Okay, guys, so let's take a look at the VIX. This is going to be no frills because I'm a I'm a nerd. All I do is sit in front of my computer and analyze charts. So um, I don't really know how to put a lot of fluff in this. We're just going to talk. So if I'm boring you to death, it's unfortunate, but this is where we're going to go with it. All right. So when I look at a chart, let me start with my trading philosophy, because when you're looking at a chart, it's not so much. There is no definitive direction for charts. Okay, it's all relative to what your time horizon is. So if you're a person that's trading off of a daily chart, your time within a trade may be a couple of days or same day or a week or something like that. So your view of what the trend is completely different than someone that's day trading off of a 5-second chart or a 1-minute chart or a 5-minute chart. Your time horizon is completely different. So the very first thing you have to do in trading is keep it very, very simple. All right. So price can only do 3 things. So you want to break it down to the smallest form. Price can only do 3 things. It can go up, it can go down, and it can stay the same. All right. So if you're going to enter a position, it's staying the same doesn't hurt or help you. Well, I guess it could hurt you if you're using leverage and you're paying some type of interest fee for your position. Okay. But if it stays the same, it typically is not really going to hurt you. So your only real job is to identify within your time horizon, within your time frame that you're trading, what is the general direction. And if you can identify the general direction within your time horizon, then you know where your bias should be. All right, which brings you to the next simple thing. So let's look at the VIX and look at the monthly chart, and the next crux of what's important kind of shows itself. All right, well, this would be the roughest chart ever to kind of do that on, but volatility charts are a little bit different because they are going to hug a line. This is kind of, so let's see if we could let's draw this here. All right, so if you look at how many contact points you have here on a monthly chart, the range of volatility is not that high. You have very high spikes, and typically these are going to be driven by major news events. Let's go back to 2008, and there you go. Major things in the market bring volatility: fear or greed. So greed is FOMO. People get scared they're going to miss out. They attack the market. Fear causes everyone to liquidate their positions, and that's when you get a lot of volatility in the market as well. So the VIX is more of a gauge of volatility. So the direction of the volatility isn't really going to show itself, because I don't think you can gauge the main drivers behind volatility from a technical perspective as much, if that makes any sense. I think with a VIX and a volatility index like this, you're going to be more inclined to follow news events and fundamentals to determine whether or not you're going to see rapid movement. Because like if we take a look at another chart, some type of a regular stock chart or something like that, the candlesticks give you indication of volume. Okay, and the VIX is the same thing, but with a VIX, you're more looking at the range than you're looking at direction. Typically the volume is not going to trend. So if I'm looking at a VIX and I'm trying to read volatility, I don't know if I can really grab a pattern from looking at the chart as much as studying the fundamental news events that are going on. Like, for example, we're in earnings season. I would venture to guess that every time you get near earnings season, the candlesticks are gonna go up and get higher due to the increased volatility in the market around earnings. Okay, so I think for this is the one thing that we could watch that I think is not really going to be affected by the up and down of technical analysis of a chart breakdown as much as it's going to be affected more by the fundamentals. And that is a heck of a first chart to look at that completely invalidates everything that I'm trying to do. So yeah, so I don't know if that helps anybody at all, and I'm sorry about that, V Speaks, but it's a volatility index, so it's kind of a little bit different. Yeah, I think it's more based on fundamentals, and I wouldn't trade it as such. But let's look at it from a let's look at it from a chart perspective. Okay, so if we are going to gauge, because it is a chart, and you can chart anything. You can chart when you wake up in the morning, which 2 feet do you put on the ground first, and when you go into the bathroom, what time is it, and then how many times you stroke your teeth when you're brushing your teeth. And that sounds silly, but if you were to chart that for 6 consecutive months, you would find that you put your left foot down 80% of the time. You may find that you are in the bathroom between 7 a.m. and 7:05 a.m., 85% of the time. And then you may find you stroke your teeth between 150 and 170, 90% of the time, right? And I just made all those numbers up, but the point is that if you chart anything, you can find commonality and patterns. So even with this volatility index, we can look at it. Let's see. All right, so this is a monthly chart. All right, so my reading shows that the volatility is going up. All right, so I love Fibonacci, and a lot of people don't like Fibonacci, and they think it's magic voodoo. It's not magic voodoo. Here's the thing about Fibonacci. Fibonacci is nothing but a price ruler. Okay, so when I was talking earlier about you want to find your bias in the market, what your direction is going to be. So if you determine that your bias is going to be to the upside, by definition, an up move means that the moves up are going to be smaller than the moves backward. So this is how beautiful Fibonacci is. Let's measure this move right here to this height right here. All right. What this tells me is if my bias is to the upside, whenever the market goes reverse or contrary to my bias, the longer it goes what I'm going to call the wrong way, because my bias is up. So as it's coming down, it's going the wrong way. If it's truly up, the further it goes down, the closer it is to the point where it's going to turn around and continue back up. This is why people buy deep retracements. This is why the market trends back to 61% or 78% and it reverses, because what this chart does for you, or what the Fibonacci does for you, it just measures the pullback. So what your job is, okay, price can only go up or price can only go down. Once you find your bias within the time frame that you're trading, then anything going opposite of your bias is giving you in this case it would be a buy, will give you a buy opportunity. And the further down it goes, the closer it is to turning around. So this high was made here. Here was the low. If I was going to trade this chart, I would start looking for an opportunity to buy it here, because I'm thinking the volatility is going to go up, because it's at a point where it's gone the wrong way based on the direction, if that makes any sense. And if my bias was the other way, I'd feel the opposite. So it's gonna play out a lot better when we get to regular charts. You really came in and tripped me up on the very first one. That's pretty cool. So that's what we're doing with that. So V Speaks, I know that was tough, but we'll look at some other patterns, and I'll do a little research this week. Because I've never tried to break down or technically trade a volatility index. Full disclosure, I traded currencies most of the time for the last 8 years, right? And there's no volume indicator in currencies. And of course, there's no individual index that you can trade either. So candlesticks and news events and things like that are the only things you can really use to gauge volatility. So having a volatility indicator is somewhat new to me to begin with, but an index based on volatility is really unique. So I need to be completely honest, I need to do a little bit more research on the history of how do you read and trade the index. Just from a charting perspective, I would look at this chart and I would tell you that the direction of this volatility is up, but I don't know how much weight that carries. And it looks like it's in a buy zone too. So that's what I think. So, but I don't know. It's not a company, so it's kind of hard to gauge that. All right. So we'll move on to the next one, and hopefully that helped. If not, sorry. All right. And we'll do SPY. Okay. Let's see. So we're going to Mana now, right? hope I can find what you're looking for. Hey Jacob, do you have a see if I can, is this what you're, this doesn't look like I'm getting what you're looking for. Ah, well, there we go. Man, a BTC. This could be difficult with no longer time frame chart. All right, so I need to zoom in a little bit here. Wow. All right, it's not giving me really any other way. So this is going to be somewhat half-hearted chart to read. All right, so first thing that we're doing, anytime you're looking at charts, you want to always start with some type of top-down analysis, right? Because if you're microscopically, if you're looking at chart, like if I just take a small sample size of what was the chart doing today, that's fine if I'm only trading in a position for today, but you have no idea how to orientate you as to what today's action means in the bigger picture. And momentum, so daily trading is more about momentum. All right. But here's the thing. Momentum is trumped by price. Fundamental traders that are in the market, they trade mostly off fundamentals, and it's based off levels. So you can, and sometimes what happened is one of my favorite trades, one of my absolute favorite trades, and there's going to be a point to this. So one of my favorite trades is when the market opens. I'd like to find an example, but where the market opens, let's say that I'm looking for a sell on this candle right here on July 18th. Let's say I'm looking at a sell position. I think the market polarity is down. Okay, what will happen a lot of the times, and let's say my sell order is up here somewhere. I'm going to put a line up there. Oh boy, I didn't mean to do that. Okay, there we go. Let's say this is my sell position, right? And the market opens right here. What will happen a lot of the time is at open, the first 15 minutes, the market will just run up, run up, run up, run up. And in my opinion, the polarity of the market has changed to down, but the market will open here and just run up and run up and run up. I will sell into this this zone right here at the opening of the market, because the polarity are telling me of what I know that based on price levels that the market shouldn't be going higher, right? And you always use a stop loss. So if you're wrong, keep your losers small. But if I identify this is the area I want to sell at, and price opens above this and it starts running way up here, I'll sell it up here. I'll wait 15 minutes, maybe 30 minutes, and I'll jump in selling completely. Even if it went out and took out this high, I'm going to sell it, because I'm going to say 7, 8 times out of 10, if polarity is the wrong direction on that chart and it went the opposite way, you're going to get one of these kind of candles, And so it's very important to have higher time frames, because you need to know what levels you're touching. Momentum can push price way too far. We saw momentum push price way too far in December on the 24th when, technically the market structure kind of broke down. There were areas where market was meeting support on a lot of different individual stocks, and price just kept punching through it, and making lower lows. That's momentum. It was capitulation. A lot of people in the market were scared, and they were just exiting their positions, and there was no rhyme or reason to it. The emotion was in the market, right? But eventually it snaps back, and that's what we're seeing now. It snaps. It went too far, and it's not going to last. But the thing about it is, you have to know those levels, and the only way to do that is to construct a map of what price should be doing at what levels, where the higher probability setups are, and you need higher time frames to do that. Okay, so I don't know what you're trading on this Mana BTC chart. I don't know which time frame you're looking at, but either way, you need to know higher time frame information. So I can't go any further than a weekly chart based on this one, which is somewhat problematic. But let's walk this through. All right, so this market is trading typically sideways. I mean, basically, as far as where the market can actually close You know, it's got a lot of range in different areas that it's going, but for the most part, your prices are right here, right? This is where it closes. It tried to get above it, comes right back down. Try to go above it, right back down. Try to go up there, right back down. Down here too, okay? So we're in a sideways moving market, so we're really going to have to narrow in on what the direction is. All right, so Tom DeMark trend lines, or Tom DeMark supply and demand lines, or what they're called. I use maybe two tools. I mean, support and resistance too, but I use 2 or 3 tools when I trade total. That's why when you look at my charts, they're so naked, because I only use Tom DeMark trend lines. I use Fibonacci to do measuring, and then I have 10 different trade setups just using basically those 2 indicators in multiple time frames. You can call that fractals, but you know, if you don't, it's just multiple time frames. So when I look at this chart, what I see is I want to know, I trade charts in individual sections, okay? Because too much of this data is too much information. That horizontal line that I had here and the one that I had here, I know this is in a range, but that's kind of irrelevant for what I may do tomorrow, right? So what I'm watching is the last move. So here's the last move. Price went up to here, made a high, came down and stopped. All right. So the polarity of this market, the last time polarity changed, is it went to the downside. So you want me to show you how I determined that, a part of how I determined that? All right. This is what you call a Tom DeMark supply line. What this means is you're looking at, and we're starting from this point right here. So let's say we're analyzing, not the horizontal line. Let's say we're analyzing from this white line. That's where we're starting our analyzation. All right. So here was a swing high. Price wouldn't go any higher. Came down, made a swing low. Okay. Then it went and made another swing high. This is a bad example because this isn't a reversal. Sorry about that. Well, the last reversal. Okay. Hold on. Sorry about that. All right, let's go to this one. Because you're in Tom DeMark, you're only dealing with the last 2. All right, so let's go with this. So at this point right here, price had come down, made a high. It came down, could not make a lower low. It actually didn't retrace that far down, and it broke through the supply line. I'm not going to kind of get into the Tom DeMark lines in this video, and I drew it wrong. I'm not really working good right here today. I'll clean it up, guys. I'll get it together. All right, this was the trend line break. Sorry, right here per Tom DeMark. All right, and so that changed the polarity of this market to up, and you got 1, 2, 3, you got 4 weeks of the price going up. All right, so when is the next time polarity changed to down? Per Tom DeMark. That was here. All right, price punched through here and closed to the downside. This polarity is down. All right, now what does that mean? Well, this is where your Fibonacci comes into place. We've got a down market, which means it was up, now it's down. All right, which means there's more sellers that entered into the market than there were buyers. It could mean that. It could just mean that there weren't any more buyers, so the sellers took control. It works both ways. But either way, now we're measuring the retracement because our bias is down, right? So we know there's going to be a reaction in this area here, you know, typically between 50 and 78.6% retracement. You're going to see a lot of two things happen. Buyers stop buying, you run out of buyers, and sellers start selling. Okay. So let's say you want to identify those areas on your map so you can trade this intraday, right? So let's put a couple lines on the chart, and it doesn't have to be exact. We're just going to kind of talk it through. All right. All right. So our bias is down currently, because that's the last thing that happened. The last thing that happened that was a market that was trending up turned around and went down. So and this is one of the biggest things in trading. Man, this is a big secret for you guys right here, right? First touch. It's a principle that I use. The very first time price reaches an area of retracement where typically the buying or selling or the direction of the market is determined, the very first time is incredibly predictable. Incredibly. I know for a fact there will be a ton of sellers in this zone the first time it touches. And your job is to react to the price action when that happens. Doesn't automatically mean that it's going to go back down and make a new low. I mean, look at where we're at. Where this thing has been in this range, chances are it's not going to go down there and make a new low. But the very first time it touches this area, there's going to be a lot of sellers there. So you have to watch the market and the reaction at that spot. And you have to have an if-then approach to your strategy to say, if it does a certain thing, I'm going to enter a trade short. But the probability is that there's going to be a bunch of sellers here. And you know that because the very first time it goes there, that's what happens. So you've got a bias, you have a direction. We know for a fact that in a market that is in a downward bias, the down moves are going to be stronger than the up moves, which means if this up move was stronger than the down move, it would go all the way back up to here. Typically, on the first time this area is touched, sellers come in, buyers jump out, you get some type of a reaction, and then when it comes back down here, you find out whether or not this is a legitimate sale that's going to push further down, or what was more likely on this particular stock, there'll be buyers down here waiting for it, and they'll probably overpower it. I mean, eventually there might have to be an event to trigger the main direction, because this thing's been in a consolidation and sideways pattern. I mean, it's been over a year now. Okay, so chances are it's going to continue to do that, but there's going to be sellers here. All right, so let's go down to a daily chart. I know I'm taking forever. I'm kind of long-winded, guys. So if I'm looking at this chart, what you're looking for is the start of the move up. You could trade this, but know that this would be counter trend. So if you're trading maybe not intraday, but if you're trading off of a daily chart, what you're looking for is at what point does the move stop going down. You could argue that you found some support right here. Price made this low, wouldn't go any lower. Pierced it shortly, wouldn't go any lower. If you draw a Tom DeMark demand line, you got outside of the range, and you say, man, that line is arbitrary. Well, it's kind of arbitrary. I mean, if you walk it back, it works. I don't like if I told somebody to draw me a trend line on the chart and it was 10 different people, everybody might draw 10 different lines. In trading, you like to search for objectivity. You want something that has rules. Tom DeMark supply and demand lines have rules. You take the most recent swing high and you find and then you go backwards and look at the most recent higher swing high, and that tells you the downward direction of the market. Okay, so I just drew that wrong. Man, I'm not on my game today, people. I think I'm nervous because I'm online. All right, so there you go. So that's how you would draw that. This helps you in aiding you at a polarity change. So let's say we were to draw our Fibonacci here or here when you made this high. Ideally, you may want to be a buyer down here. And look what happened when it got there. Price stopped. There's a 61% Fibonacci level right here. Look what price is doing at that level. Polarity changed to up right here. 61 became support. Now, what we don't know is if it's going to continue up, right? Imagine if you could find a strategy where you could enter here and get out here before you found out if you were wrong or not. That'd be interesting. Pretty high probability, right? I trade a strategy very similar to that. Several of my trades are based on that. Now, if you wanted to dial this down and get into the daily chart, the weekly chart, I just drew this line, but the weekly chart has already told us what's going on. We changed polarity on this chart here, so we could be looking for up moves on this chart. All right, so bigger picture, and I don't think I have enough time to really get into day trading is the most difficult thing to do in trading, because you have to know the direction on so many different charts, and it's constructing a completely different trading plan. So, I mean, I don't think for these videos that we do, we'll be able to really get into how to trade it exactly, but this helps on how to break down your chart. So you got the weekly resistance up here. The polarity has changed to up on this particular asset or this chart. So, we don't know how far it's going to retrace back up here. It may make it back up. you may find that it puts in some type of resistance level, a high right here, and it can't break any further down, and then you get a trend line break going the other way, and it makes a new lower low, and it may continue down. So you need a trading plan. But if I was to guess, I would think that this thing is probably going to continue up, at least test the high that it created right here. And then if it breaks through that, you're not going to meet, larger term resistance until you get into this area here. All right, so I'd probably be a buyer on this one. I mean, don't take what I'm saying on this video as gold. I mean, it's probabilities. Okay, so I spent a lot of time on that one, so I hope that helps somebody out, and we'll see. All right, let's see. Euro dollar. Yeah, that's getting really easy. And as far as to answer your question, V Speaks, on the 200 and the 50, yeah, I think that they're excellent. But you know what? I'm gonna show you something when we get into a chart that I can really. We're about to get into some charts that I can really do some stuff on here. So let's go to Euro USD. All right, all right. Now we're cooking. All right, so let's construct this chart. All right, monthly chart. I want you to look at a couple things. All right. We're finding consolidation kind of right here near the 61% retracement of this longer move. So there's a larger move that started in December that ended in November it ended in January of 18. So you had a 2-year run up. All right. So you have to be careful here because the price is reaching a 61% retracement of that bigger move and may, turn here and make a bigger move going the other way. All right. But that said, so we know that in our mind. We just take that as a mental note. However, trading it one section at a time, we've pierced down through, okay, so this is what this means in real time. Price came down there the first time, made a swing low, and it pushed up, right? And then it came up and closed on the other side of this demand line that was created, which means it didn't have enough steam to push higher. So there's a lot of sellers still in this market. This is what this means. All right. So if we're going to look at this section of the chart on a monthly level, remember, we're trading it section by section. All right. So let's zoom in. On a monthly level, the very first time it comes back and touches this level after it's recently broke the direction. Okay, so the direction briefly was going up, and then it penetrated and made another move down. So the very first time you get to a resistance area from that move, typically there's a major reaction. All right, so on my charts, monthly support and resistance, I typically make them this red color, and I make the bars bigger. And the reason for this is kind of like a visual cue. This allows me, and I'll show you when I get down to the daily chart, that I don't have to zoom out to the monthly and the weekly charts anymore. The lines on the screen are color coded and tell me exactly what's going on, and it creates a roadmap for me. All right, so that one's done. That's monthly. So let's go into the weekly chart. So now we know, as far as the last major move on a monthly chart, this was it. All right, this was it. And if you look at it, it looks like it's got a little head and shoulders pattern forming here, right? All right, so this was the last move down. This is where the resistance area would be, the sellers would be. Okay, now on a weekly chart, price has gone up to there, and the direction is also down because per time to mark, this is a polarity change. And you want to know where's the first polarity change, where it changed to up. Here. I love these because, all right, so check this out. I have the magnet on, so it's not going to line up perfectly. All right. So when this swing high was created, the line, so the swing high was created on this candle here. So this became your reference point, and this is the previous higher high. This creates the supply line. All right. So price adheres to it. Price broke through it right here on this blue candle, right? That's the first time price broke through it. And as we know, now we start measuring the market. The very first time it came to the 61% retracement, look what price did. It turned around and went the other way. All right, very first time. First touch at the change of polarity is a very, very, very predictable spot. Okay, now our bias could have changed to buys. That means we're looking for buys in this direction. All right, but you have to be careful because you know that there's resistance here off of the weekly chart. Now that move up creates this demand line. That's basically giving you the angle of the rising of the price at what degree of an angle price is going up, the rate of the rise. It basically adheres to the line. So that line has been broken. The overall direction's down on a weekly chart. The move that started here on this blue candle headed up. Looks like it's died, right? So the polarity on a weekly chart is down. So now we're watching the move. Oh, turn the magnet back on so we get accurate measurements here. All right. So it's back to down. All right, so this is a weekly chart. We're going to identify these levels. These levels, that doesn't sound like proper English at all. We're going to identify the levels that we've just showed here. And I'm going to make these smaller because they're the weekly. And I'm going to put them on the chart too. All right. This gives me a bias. And we're going to go down to a daily chart. All right. So on the daily chart, if I'm trading this, this is the move from the weekly chart, this move here. All right. The very first time price comes to this area, there's going to be a reaction. Now, I can't tell you that the reaction means price is going to go down and it's going to, break this low and continue down. No one knows that because, take a look at, that thing works in both ways. If the overall direction of the market is supposed to be up, take a look at this. This is the 61% retracement of the up move that started back here. And this could be the turning point that it's going to go further up. So you say, well, that's confusing. That's contradictory. What are you supposed to do? Well, what I do and my entire trading strategy is based off of this is the highest probability time. The very first time price comes here in this area, which is the area that price typically runs out of gas and sellers re-enter. The very first time price comes here, I would look for a short, and whatever short position I took, let's say price came up to where this circle is. Whatever short position I took, I would aim to be out of the trade before we got right back here. Because this is the area that tells me I'm wrong. If this is just the first, so let's walk this backward. Price on a monthly level, it didn't quite get to the zone. I mean, 50% retracement was around here. So let's say this, and the lower the retracement, possibly the stronger the move, right? So this could be a tremendous amount of pressure down. I hope this chart hasn't got too messy for you guys. But so prices come down, it went up, touched, almost reached monthly resistance. The polarity changed back to down on a weekly chart. Okay. And I'm going to get this off so it can be a little more clean. So it went up here, it reached a point, wouldn't go any higher, and it came down. All right. We could look at this as it's going to come back here and then make a lower low, right? We could think that it's going to do, turn the magnet off. We could think it's going to do one of these numbers and come down here. Wow, that's wonky. Okay. But we don't know that that's going to happen. What this could be is that the real direction of the market is going to be up from here. So the price could do this and come back and actually get a chance to test this zone for the first time. Because remember, we haven't even gotten there yet. It stopped short. And then from there, it could go down here. We don't know what the market's going to do is my point. No one knows. They're lying to you if they tell you that they do. No one knows. Okay, so our job isn't really to prognosticate or predict where the market's going. Our job is to play probabilities. What I know for a fact is that there's going to be a ton of sellers here waiting for the market, and I know that the market move from down here to here removes a lot of the buyers from the market, and the polarity is down because we came from here to here, we retraced. The direction's down in the bigger picture. So when price comes here, I'm looking for a short. But you know what tells me that I'm wrong is the buyers that are waiting down here to buy it. Let's say that this retracement from this move up, this is support and the price is going up here. Probability wise, I'm probably going to find that out somewhere down here. So if I'm going to enter my trade, I'm not going to try and predict the market. I'm going to position myself to be able to get into a trade in this zone on a daily chart where my risk reward ratio would be 2 to 1, and I can be out before I get here to find out that I'm wrong. And I know that's contrary to what a lot of people like to trade. A lot of people like, let your winners run and all that kind of stuff. And, that's one way to do it. And if let's say I got a really good sell signal in this zone, I may let that one run because it's a longer term move. But we never even reached this zone where all the sellers come in on the euro. So I don't have full confidence that this thing stopping here is enough to take it lower. I don't know if enough of the buyers have been removed, because historically, if you look at charts, price changes in this, it pivots in this zone, not here. Okay, so if I'm trading this chart right now, this area here, I probably wouldn't be a buyer because it's counter trend. Weekly trend is down, monthly trend is down, and it just, I don't want a counter trend trade. I'm holding still and I'm waiting for it to come here and give me a sell signal. And if I don't get one, I don't trade it at all. And if it punches through here, if I did get a sell signal and I entered a trade and it punches through and I'm wrong, that's where you have to use good risk management, size your position properly, take your loss, and move on to the next trade. Okay, so the overall direction weekly and monthly on the Euro USD is down. I would be looking for a sell in that area that I showed you. You could trade this move back up. There's some room, but it is counter trend to the weekly and the monthly. That's that's kind of a dangerous game. Now intraday, you may get all right. Here's the current demand line, right? So if you get something that breaks on the other side of this, that could tell you that the polarity is up. And if you're going to trade it intraday, knowing that resistance is here, you could trade it up to that. But I don't like to buy in the middle of the range. If I know resistance is here and I've got a swing low right here, because we've got a swing low that's already formed now, which means there's somewhat buying pressure in the market. I don't like to buy in the middle of the range because it's just risky there. Low probability. Your job as a trader is to put probability on your side. So higher probability trade is to wait till it gets into this zone. If you get a reaction to the downside, take it. If not, if you're a momentum trader, I don't momentum trade, by the way. I'm a swing trader, basically. So I don't really have a strategy for momentum. All right. So if you trade momentum, maybe, you could find something if it broke higher than this. But I mean, if you broke higher than this, you'd be right in the middle of the monthly resistance zone. So that's kind of dangerous too, So that's my thoughts on that. Let's see. I'm trying to read your guys. I like I said, I don't have my second screen, so I kind of I'm doing this on my phone too. And as I'm looking at the screen, I don't really I'm not able to look at the chat at the same time. So I'm sorry if I don't. It takes me a long time. Oh, as far as the 50 and the 200. All right, so let's indicators. I think that's this thing. All right, so let's just put a 50 and a 200 on here. I'm just going to go with simple instead of that's a 200, and let's put a 50. All right. I want to change the color on these things. All right, so we got 200 and a 50. All right, so this is a daily chart. And I mean, I'm not trying to be facetious, okay? But check this out. All right, this is telling me that the direction of this market is down. All right, that's with the angle of the 200. Now, 200 and the 50 as support and resistance. I don't respect them very much because look at the 50 moving average, and look how price just does whatever it wants through it. Your eyes can see whatever you want your eyes to see. And if you want to make it, this was resistance because it touched it. If you want to make that something, then it can be. But for me, if I'm looking at the market one move at a time, the market made a bigger down move than it made you see this up move here. It broke that low, made a big move. So I'm just looking at how far is it going to retrace before it turns around. Remember, if the direction is down, the down moves are going to be larger than the up moves. So every time it takes a leg, I'm just measuring the leg. All right, so look at this one. Came down, made a low, came up almost 50%, continued down. Well, let's measure the next section. I'm taking it one section at a time. This one came up to about 61%, went further down. This one came up 61, almost 78%, went further down. See? Okay, this one section at a time, came up to 78, okay, and went down, failed to make a new low. All right, check this out. Let's swap it around now. It failed to make a new low. Can you guess where it failed to make a new low at? 61 to 78%. Look at that. Now it's up. Polarity change, people. Let's measure the up move. It's kind of hard to see that. Let's zoom in. This move from here to here, where did the market stop? 61%. Polarity change. You see how that works? Market's going up. The market, if you analyze it section by section, down, up, down, up, down, up, down, not lower down, 61%, back up, not lower, back up, lower this time, still didn't break, you're still within the range of this move here, still didn't go any lower, eventually up. It's very simple. I mean, it's hard to trade, but it's very simple in concept. Market's only going to go up or down. Find the polarity. Once you pick a polarity, the moves in that direction are going to be larger than the moves in the other direction by definition. Okay? And then your job is just to measure how far it comes back and jump in. Now, how that relates to a moving average? Moving average is telling me about right here that the market's starting to go down, right? You don't really know this thing is angled down really until somewhere around here, all right? It started going down here, right? You don't know that it's going down until around right here. You want to know when I knew it was going down? Here. This candle. See? You're late. If you're waiting for a cross, you're waiting for moving averages, you're waiting for some type of oscillator, you're waiting for divergence on a MACD, you're waiting for RSI to overbuy or oversell. Those are after the fact indicators. They're not leading. You want price tells you everything you need to know. Price came up, made a high. Price came up, made a new high, couldn't sustain it. Price made a lower high on this day. I'm talking about 3 days in a row. Fourth day here, price broke the upward momentum that this market had. My bias is now changing to down. So it goes down. Any move up, I'm measuring it just to see how far it's going to come up because my probability is that it's going to come up so far and continue down. And even in this area where it's a reversal, price went up. See, like here's your down move. Price went up. It didn't go straight past this number. No, there was a reaction here. and it pushed you back down to the area where I just identified. Like this, when you find out you're wrong, you're gonna find out around here. That's exactly what it did. Price came up. It typically doesn't V formation and just blast and make a new high. Sometimes it does. The probability is that it doesn't do that. So you identified the zone, you look for sales in this area, you sold it, and you want to be out before you get here, because if you're wrong, this is typically where you're going to find out. Okay, hope that makes sense. So the moving average is fine, it's great. And if I think like the crosses on the moving averages, the 50 and the 200, it's good to tell you. I mean, you probably would have found this a lot sooner if you're trading a slower time frame chart. Let's go to 15-minute. Okay, there's your cross there on the 15-minute chart. But I mean, I don't know. I mean, it crossed over here up. I just think it's late. I think it overcomplicates things. I don't want to analyze the line and what I think the line means. I want to pick a polarity or a direction that I believe that the market's going with some type of objective tool, and then I'm gonna trade in that direction on my time horizon. Okay, because remember, now this chart is simple because the direction monthly is down and the direction weekly is down. So, we're down. But what happens when the monthly direction is down but the weekly direction is up? Well, that means that the weekly direction going up is a retracement against the downward move of the monthly chart. And you have to pay attention to that. All right, hope that makes sense. Let me see. Doesn't seem to be anybody else in the chat. Anybody else have anything else that you guys want to go over? I mean, I think we just did 45 minutes there. I talk a lot. And I'll tell you, I have thousands of hours in the charts. I'm oversimplifying this a little bit because, like I told you, I have 10 different setups. 10 different setups. So there's different ways to trade all of this. But the core concept of, to keep it as simple as possible, if price is going up, the downward moves. Now you have to have a conviction now. And you don't have a conviction because you believe, you have a conviction because you have an objective tool that tells you that the direction is up, right? But if it's truly going to be up, the up moves are going to be bigger than the down moves. And any down move in that market is just a retracement. And the further it goes the wrong way, quote unquote, the closer it is to turning around and going the right way. But it's uncomfortable because the further it falls down, to buy into that is difficult to do psyche wise. But that's what the big guys do. So the most successful traders, they're not waiting for a bunch of stuff to happen to get into the market. They're predicting to some extent, playing probabilities. That's why you protect yourself with good money management, because you're going to be wrong. My strategy is wrong 40% of the time, maybe give or take. I track all 10 of my trades individually, all of them, and so I have 10 different trade setups. I have them numbered 1 through 9, and 5 has 2, 5 and 5x. So there's 10 total. They're numbered 1 through 9, 5 and 5x as well. And I track the results, the winning percentage of every single type of trade that I take. And they all have different winning percentages and different ways that I interact, but the core dynamic is the same. It's all built on the exact same principle, is what I'm showing you right here. All right, so let's see. SO is at the actual stock. Let's see. Southern. All right, let's look at Southern. All right, let's speed this up. All right, we got some consolidation, but even within consolidation, the market still has directions and polarity, no doubt about it. All right, so I always like to start here because you want to look at the big picture. All right, so look what happened. The last major move down was here, and price retraced to the 61%. I don't even have to draw it. That's right at the 61. I can eyeball them nowadays. All right, let me put the magnet on it so it's accurate. All right, 61 is 49.26. The high here was, I turned that off for this chart. Well, let's put this at 49.26. Look at that. All right, so there's a 61. Price hit that point, immediately reaction. First time it touched it, reaction, right? All right, so, but here's what we have to notice. Price failed to make a new low. So the low that was made from the original move held up, right? So you've got some serious support. And look how many times it's tested on a monthly chart. 1, 2, 3, 4, 5 times. So you got some serious support there. Market really doesn't want to pay below that price. All right. And what you have here is a polarity change to the upside. Right? I don't know if it's a change, but you know, you had the downward move, the retest wouldn't go any higher. It broke down, failed. Now this trend of downwardness has been broken. All right, so we're no longer in a more supply than demand phase. We're in a more demand than supply. This is what this does. Time to mark trend lines being objective visually give you a cue for when the how do you explain it? When I call it the polarity change. There's more buyers at this point at a faster rate than there were than this, because let me find a spot where it adheres to it. Yeah, okay. So let's look here. All right. When these two lows happen, you know, from here to here, this was the direction of the rise. Not very steep. Okay, but by the time the next swing low was created, the momentum behind it, because it's a steeper angle, the momentum behind it, this time to mark trend line tells you, okay, this is a steeper, more powerful move up. But look what happened when price got outside of that that steepness. Well, your polarity changed, because now you no longer had higher highs. You know, during this section right here as it's running, you're getting higher highs. Now, once it broke through that, you're getting lower lows or lower highs, and then eventually lower lows. Okay, so these things are they're powerful. So this is the current, you know, demand line or supply line. I'm sorry, you can call it a downtrend line if you want, and it's broken through. So on this particular trade, I would be looking for up moves. Now this is, you know, this is the monthly chart. So let's I'm gonna just finish this up and then we'll wrap this up. This is going a long time. All right, so I'm not gonna change the color because there's only a couple people here. So, but this is, just remember, yeah, let's change the color. Let's be precise. All right, so there's our monthly. We go to the weekly chart. We know there's monthly support down here, and we know there's monthly support down in this area anyway, right? Because price is just consistently failing down here. All right, so this price is running up, and it's broken the trend. So it doesn't really show any signs of going back down. I mean, we're making new highs. So as far as trading this, I really wouldn't look at anything. Now here's one option that you could trade. I would know that there's support here, and remember, as this thing continues up, you'd have to take your fib and continue following price with it, because until it turns around, that fib's not valid, you know. So let me back up, give you an example. Ooh, that's bad. All right, so from here, Jason. All right. Oh my God, the magnet's not working. All right, so right now the 61.78, you know, which is the area that the price typically turns around at, is here. But if price goes higher, let's say price goes up to here, you know, the level changes. So until the price starts turning around and coming back this way, it's not in retracement yet. So you're just going to continue to follow this thing, and your levels are going to change as the price goes up. You see how that works? Your levels change as price goes up. All right. Now, so as you're watching this on a daily chart, you're saying to yourself, well, how do I know that it's going to stop going up? One good hint is going to be having your demand line on there. You see, price is adhering to this line. When price closes on the other side of this line and breaks through it, it doesn't mean that it's going to go down, but it's telling you that the rate of rise, the rate of increase that the price was on is no longer able to sustain itself. That's what it's telling you. And remember, buying and selling in the market is basically a fight between sellers and buyers at all times. And it's not sometimes it's a 60-40 deal or a 70-30 deal. That's where the price goes up steep like this. But remember, when that happens, there's going to be more buyers than sellers, and eventually that runs out. So markets get tired. Eventually, the equilibrium between buyers and sellers gets way out of whack. Too many buyers, way too many buyers. Well, those people that buy, and you get a real steep demand line like this. What eventually happens, invariably, you're going to get a break through the line, which doesn't just say that the market's going down. It's telling you that it could not sustain that momentum, which puts the odds in your favor that it could go down, which is why you look for a short, because it's not necessarily that it's going to go down, but you have higher odds of selling it after it breaks this line than before this line breaks. The longer it holds this line, you're throwing money at a train that's going the wrong direction. So when it breaks that, its angle of increase, then you have a higher probability to be right looking for a sell position. But when that happens, you definitely want to know where the buyers are going to re-enter the market. So you got to be careful. So when this thing breaks through, you could look for a short. But if you're a person that says, I'm only going to trade in the direction of the monthly trend, then you probably wait till it came down here and look for a buy. And, as price is falling down here, let me see if I can use the drawing tool and do a better job this time. So what you could get is you break through the line, you get a retest, and remember, the polarity's changed, so it's not going to make it all the way up and make a new high, or it might. That's how you get stopped out sometimes. And then it comes back down, and let's say we get, a little test here, and it comes down, and then you get here, and buyers are going to re-enter the market. And a lot of the times what you'll get is one of these, the retest. Oh, Lord, that's bad. The retest, sorry about that. And then the move. I mean, markets rarely go straight up and straight down. Typically never. You get a V formation here, and it touched or broke this high. This is very rare. This doesn't happen very often. So 10% of the time you'll get this. So it's just not very common. But you wait for the trigger. Like, I didn't just sell here, or I didn't just sell here. You're waiting because you've got your trend line here to tell you, hey, once this momentum breaks and it gets on the other side of this thing, then maybe that's a safer place. The odds are more in your favor to be correct to take a short position. And if you have a momentum strategy, maybe, if you break this area, you buy it. But I don't trade those because this is a very morbid example, but every day you live, you're closer to the day you die. Every time you take off in a plane, you're closer to the time that it lands. The longer the market's been selling off, the closer it is to the time it's going to turn around. So if you buy this late in the game, you're asking for trouble. I don't know what the odds of you could be right, but you're probably looking at 90% that you're going to fail trying to buy this as momentum at the end of a move like this. You're much better off letting the market reset, recoil, and buying down here. The odds are just in your favor better. So looking at these charts, you just want to construct a price point, in the areas or the zones that you definitely want to start paying attention to look for your bias. And you're not going to be right all the time, which is why it's important. I tried to make the example earlier. If I'm right 60% and 40% of the time. All right, so let's take 10 trades, for example. And let's say I risk 1% per trade and I take 10 trades. I lose 4 trades, I lose 4%. If my wins are 2 times as big as my losses and I'm right 60% of the time, the 6 winners that I had, I made 12%. I subtract the 4% that I lost from the 12% that I won, I made 8% on that strategy, only being right 60% of the time. So if your strategy is constructed where your winners are bigger than your losers, and you win more than you lose, you're going to make a lot of money. You can make money if your wins are 2 times as large as your losers. You'll make money all the way down to 38% accuracy. Even at 40%, you're still making money. 50%, you're making good money. 60%, you're making great money. 70%, you're Buffett or somebody. So, that's how that works. All right, let me look at the chat. Currently trading. All right. Let's go to my actual charts here. Now, full disclosure, on TradingView, this is not a live account. What I do is I use the charting software because I like it so much, and I mirror my trades on TradingView. All right, and so I'll open them in the paper trading section so that as I'm looking at my charts, I'll actually see what I'm in, what I'm out of, all that kind of stuff. Okay, but my charts are preset. So here's my watch list here. Next time I'll do a better job, guys, at being able to look at the chat and talk at the same time and try not to be so long-winded. But what am I doing? Okay, so here's my watch list. All right, so I separate them, and there's a bunch of stocks here. So I'm watching all of them separately. I'm my own screener. So if you look at any individual chart for me, this is the chart that I'm looking at in the daytime. See this market closes real time, and you see I have my time to mark lines on here. I've identified weekly resistance. I've identified monthly resistance on this chart. So all of these charts that don't have labels on them, there's TSN. That Tyson, that looks a lot like the chart we were just looking at, right? And it's also, and look at that, polarity change for the giant up move at monthly resistance. So possible sell opportunity. You need an entry strategy, okay? But this is what I watch, and so these are I watch all of these stocks, no individual one. I'm watching all of them, and then basically when certain things happen, I move them up. So when I get a polarity change on a chart at a resistance area or at an area that interests me, like let's say Disney, for example, this is a I don't know if I should be showing this live, but I actually wouldn't take this trade now because there's some things in here that invalidated it. I just forgot to delete this. But basically, I had a polarity change here at resistance on this chart, and this is the 61% retracement, this trigger. And then here was my entry, and that's based on, I use a mathematical calculation as to what size my stop should be, but it's always, my entry price is going to be 2 to 1 risk reward on every trade at least. All right, and so I move this chart when it gets to this level to yellow. So I start watching it and I put alerts on it. This is what this little indicator here means, is this is an alert. So I'll get an email or a notification that price has crossed that level and I should be ready to enter. I should already put in my shorts or my long or whatever. So normally if price passes this part, that means I'll turn it to red. I don't think I have anything on the red list. All right, so if price, let's say I turn this one, Disney. Let's put Disney in the red box. All right, so let's say Disney's now red. I would put my order in. I'd enter my order, and now I'm live. And then once I'm in the trade, it's blue. So right now, the active trades that I have are AT&T. I cleared this chart earlier, so it doesn't show the arrows on here. But I sold here on this blue candle right here a while back, and on CVS I bought, and actually that one's still up here. So I bought it with a $1.87 stop, 392 shares, and I bought here. And I had 8 open trades that come into the week. 6 of them closed, 5 winners, 1 loser, and I only had 2 buy position trades, and CVS is one of them, and we'll see how it pans out. But this one I think has gone far enough that my stop loss is now at break even. So even if it reverses and goes completely against me, it's just going to stop me out at 0. So I can't lose any money on this trade. So the only thing I have at risk right now is AT&T. But as far as what I trade, it's a full range of different things. I mean, I've got tech, I've got consumer pharmaceuticals, Um, that's tech. That's broadcaster. Whatever. Marvell. I've got transportation. I've got energy. I have consumer cyclicals. I have retail. So I have network. So it's a lot of different stuff. It's diversified, and we'll talk about correlation on another day. I need to learn how to stop talking so much. But that's pretty much it, guys. That's what I think. Was that helpful at all? Anybody still there? I talked you guys into a coma. Awkward silence. Okay. Cool. Glad you gathered something from it. I know it's a lot to digest. But if you were to really get in there and play with your charts, pay attention to price. Let me go back to a naked chart. I mean, I really want you guys to get this. Let me see if I can think of a chart that I've seen recently. And I'm not trying to cherry pick a chart, but let's look at SPY. All right, because I mean it's always best to do this in real time. But it's all ignore my my things there. Let's see. Okay, if you can manage to look at the market, kind of one section at a time, it'll really help you out. And I think monthly charts are always best because they're smoothed out. That's really too smooth. I guess you could gather something from this, but there's always two different things happening at the same time. All right, so let me draw your attention right here. This price moved down and made a big move right here. All right, and you could just tell. I mean, I don't have to get too specific with the time to mark stuff, but you could just tell there was a trend line. It broke, which means my polarity changes is down. So I'm looking for a sell when price comes further back, and look what it does. It failed to make a new high, and one could argue the polarity changed for that down move there, which told you my bias is up, right? Okay, that's common sense to some extent. But here's the deal. This is a 61 retracement bounce too. What do you mean, Jason? From here. This is where the confusion comes in. Right? There's always, and actually you could put it here. All right, 61% retracement from this move is here. There's always multiple sides to the story at all times. So the market does move this way. It's just which way is the market looking at the time frame that you're in. You see what I'm saying? Like all of these, this is a 78% retracement right here. Okay, I can look at it and just tell you. Right here. That's a 78% retracement. So the move was down. Market came back 78%. Sellers sitting there waiting. Boom. Drive it back down. Here's the key indicator. Wow, it couldn't go any further down. Right, because the direction of the market was supposed to be, is going to be up. Guess what? This is a 78% retracement of the move up. It's always moving this way. If the market's going up, the up moves are bigger than the down moves. If it's going down, the down moves are bigger than the up moves. Here's the deal. You don't have to know if it's going to continue up or continue down. Your job can be to play between the zones. Me, my trading strategy, I'm a seller here and I'm a buyer here. I'm not trying to predict if the market's going up here. Not my job. When price, I'll show you another section. All right, let's do this one. Price broke to the upside here. This is a tricky one because price went to the downside. All right, no, this could be a good example of where you lose a trade. All right, so right here, I'm looking to buy. When price, oh boy, I'm sorry. Can you guys see that? Let's go into a daily chart so you can zoom in on that and make it a little cleaner. All right, price broke the trend going up here, which means in this zone, I'm a buyer. And look what price did when it got there on a daily level. Right? Price also broke to the downside here. which means I would have been a seller in this area. And look, I would have lost that trade. But here's where money management comes in. If I made 2% on my buy on this side and I lost 1% on my sell on that side, I'm still a net winner. So my job is to be right more than I'm wrong, or at least 50-50, and I'm still making money. So instead of trying, like if you're going to walk to California, I think I made this example on one of the previous videos. If you're going to walk to California, you're going west. Like I'm on the East Coast. If I want to walk to California, I'm walking west. I'm not going to get there with 2 steps. You take 1 step at a time, right? So same thing with the chart. Don't overthink it. You know, the moving average is cool and it tells you general direction, but I'll tell you what tells you general direction. Zoom out on your chart and go to a higher time frame. Look, you know, it'll tell you this one's up. There you go. No need for moving average. Problem solved. Like to tell me what the moving average, the 200 on this thing. All right, let me see if we can do it real quick. And I'm going to get off this video because this is way long. I told you guys that I could talk for 5 hours on this stuff, and I'm not joking. Like, if we had actual dialogue, this video would be 80 years long. But let's put a 200 on here. All right, on the daily level. All right, this is telling you that the market direction is up, right? Okay, that's cool. It's telling you that the market direction's up. And it's telling you here that price, and this is why I don't really like the 200. Price broke through it, and then broke through it, and then went through it, and then broke through it, and went. It doesn't respect it at all. I don't see anything that's tradable there, okay? And it's lagging. But let me show you something else. If I go to a monthly chart, let's get the indicator out of here, and I just look at the chart, and I just put a trend line here. Well, actually, you know, you've got a couple different trend lines. You got that direction, and then you've got a directional change. Hold on. Where the angle changed. Here, right? When price broke through that, that told you all you needed to know. I don't need to wait for a moving average, you know, 3 weeks from now to tell me that the price is now down. I already know that by looking at the price action. You know, because when the market's moving up, look at what it does. High, pullback, small pullback, higher, 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 higher. Okay, here, low, consolidation, low. And you could have got money on sales in that position, and then eventually broke up higher and then higher. Once that trend breaks, you can change your polarity. It doesn't tell you where it's going to go, but it can give you a bias for a short period of time until it proves you wrong the other direction. So if you just study price, the moving average is just going to give you more to think about. You don't need more to think about. You need less to think about. You want to be fast, quick, and price can kind of tell you everything you need to know. And anytime you need to know direction, just zoom out on your chart or back up your time frame, and you can look at it with your eyeballs and it'll tell you, or draw a quick trend line and you're done. All right, so you don't really need it. It's after the fact information. Okay, all right. So I'm gonna let you guys go. I talked a hole in everyone's head today. The next sessions will probably be significantly shorter because we can kind of skip through the fundamental stuff. I'm thinking there will be a general audience and we could just pull the chart up and break it down, look at it, and then move on to something else. And I'll do a weekly recap on the market at the end of the week. Like I said, I'm traveling internationally tomorrow, so the video could come late over the weekend, or maybe, yeah, probably late over the weekend. And I don't know how good my Wi-Fi or my internet's going to be at my condo out of the country too, so we'll see, because I never streamed there, but we'll figure it out. Thank everybody that came to the video or to this live chat room. I appreciate you guys coming out, and I hope you guys have a good night. All right, so I'll talk to you later. I don't know how to turn the stream off.